On CTKSmethod.org, there's a special area where you can download the cheat sheet. It's absolutely free of charge. The cheat sheet will give you X-ray vision into what the markets are doing. And this is the area here. You can see that there are 7 rows. I'll go through those in a minute. There are a lot of helpful videos, and right here you can get the official ticker list, which we'll just get into. Those 7 rows are risk 1 and row 1 and row 2, which are all about risk. What we saw in yesterday's price action was the VIX, the volatility gauge of the main markets, came up substantially. In fact, 16.28%. We saw broad-based falls in the other areas. The VIX has been controlling the market currently, and row 2 was all risk off. Row 3 was the major market indices, and we saw the Russell come down by nearly 3%. For the row 3 references, we saw all the futures markets coming down. And what about row 4? Row 4 is the stock market. MicroStrategy was hit really hard, as was Tesla. Crypto was also hit hard. We saw a big sell-off, but I'll just explain that a little bit later. In row 5 references, we're seeing the money is flowing from the crypto market into the stable coins. That's why that is green. Row 6 is Litecoin, Bitcoin Cash, and a few others. We can see they're all negative. Row 7, all negative. What about the memes? The gateway to the crypto market, all negative. What about the row 1 references? These are important because this is showing that the risk-off activity is potentially just getting started. Now, a lot of people are saying that crypto came down because Bybit got hacked for $1.5 billion. Caramba, that's a lot. But you can see across the cheat sheet, this is not sufficient to just pull the major market indices and the futures of different countries down. Bybit is, of course, really important, but it's not the reason the market sold down. The Lazarus Group, the North Korean hacking group, has been associated with the largest crypto theft in history, $1.5 billion. The next largest crypto theft was 611 million stolen from Poly Network in 2021. The key to remember, this definitely impacted the crypto market, but it didn't impact the stock market. When we look through row 1, the major culprit in Bitcoin and markets coming down was the VIX spiking. You can see the VIX spike like hell. It literally just went straight up the wall. And what did that do to Bitcoin? Bitcoin, this is just a normal chart. You can see that Bitcoin absolutely retraced. Things were looking good for Bitcoin in the last 24 hours until the VIX spiked up. Now, a lot of different commentators are saying a lot of different things could have happened here. They're saying that the inflation expectations are starting to come up. When we look at Fed, inflation expectations, they're basically flatline. But when we look at the 5-year and the 10-year break-even inflation rate, they're really going for it. The combination of tariffs and so many issues inside the global economic system is pointing to continued inflation. That's going to create a really choppy market. You must know your levels. We're going to go through the levels next. They are vital to keep your eyes on. Let's run the numbers. In yesterday's video, we said we needed to keep our eye on the 98,384 and the 96,493 level. Let's have a look at what played out with price, but first let's put on the indicator so we understand where these levels were coming from. What did we see as price went forward? As time went forward, we came up to the 99,305 and the 99,534 structural resistance levels. We didn't have any success bypassing them. We had a structural failure on the first attempt and a second structural failure on the third. We came up, did an underside retest and passed through. Because there's so much negativity, that 96,493 simply couldn't hold. We've had buyers come in at the 94,574 level. So let's just update this chart. Of course, the crypto market is wildly dependent on what Bitcoin does. If Bitcoin couldn't get through that overhead structural resistance, it's going to come back and seek to either consolidate at around that 98,384 or get negative structural attraction to lower levels. Please always remember, price is always moving in a wave. It's always going up and down. This is how we make money. That volatility is not a bad thing to us, it's a good thing. Now we can see currently there's a couple of levels that we must bear in mind for the next 24 hours. One is the 94,574, the other 96,493. A lot of people will be considering what happens when we go lower. Fortunately, we have a degree of underpinning structural support playing out between 93,432 and 94,574. There's a reason that I state we must look at total crypto market cap and Bitcoin as well. When Bitcoin came into this overhead structural resistance, remember those couple of levels, it failed, it was pushed down, retested, and we also saw the total crypto market cap failed as well. We're starting to see the buyers come in at around that $3.05 trillion mark. Looking from a structural perspective on Litecoin, we were here in yesterday's price action. We came up to the 139.20 mark and we were rejected. We also failed structurally at the 136.70. When you fail structurally, it creates negative structural attraction to levels below. The fortunate thing on Litecoin, between 120.60 and 122.90, there's a good deal of underpinning structural support. This is very similar to Bitcoin's price paths, or price patterns as well, structurally speaking. Being aware of where the structural resistance levels are and the structural support levels are, as well as the gaps between them, is a vitally important thing to understand. We can see that when we look at ADA just was rallying into yesterday, and also it flatlined because there was so much structural overhead resistance. We remember that Bitcoin broke out momentarily but then failed, and then total crypto market cap also failed. That put negative price momentum across everything inside the crypto market, and ADA was no exception. We do see that ADA has got fairly substantial structural support at 73.99. Just keep these levels in mind for the next 24 hours. We can see a different pattern playing out on Solana. Solana was quite strong until it reached its overhead structural resistance level at 180.30. And as Bitcoin failed, total crypto market failed, it all failed. It pulled Solana down from 180.30 to 170.10, and this was fairly strong, so it's managed to just rebound it at the current time. Keep your eye on the 170.10 mark and also the 165.40. One thing to always be aware of, when something just rallies like hell and it gets up into structural resistance, it's likely to consolidate before making a decision. And you know that XRP was pushed down because Bitcoin and also total crypto market failed, and they failed at the 2646 mark on XRP. And so we've seen XRP just interact with these two structural levels, one at 2615 and one at 255.6. Just bear in mind, if we start to come down, this 241.99 mark is very important for XRP to hold. And for the bullish case, price momentum getting above 2646 is the key. The more overhead structural resistance a particular chart has, the worse it gets for that particular chart. Even though Bitcoin broke out and was then squashed down, and total crypto market cap also failed. Because Doge had a negative CTKS gap, there wasn't much in the way of structural underpinning support to capture any negative price movements, and that's meant that Doge has come down quite substantially. There's also a weight of sellers up here. I pointed this out several days ago to just give you a bit of a heads up that the memes could get really volatile, and that volatility is not a problem. You can use it for your advantage if you know how to profit from CTKS method structure. And the partial scholarship award winners, I'll reach out to you across this weekend. The real issue is, if you don't keep your mind on the cheat sheet, you will not understand why markets are moving the way that they're moving. If you don't know the structure, you will not know when a price, even though it's rallied up quite substantially, if it hits an absolute ton of overhead structural resistance, it will go flat. And if the markets start to come down, it will come down as well. The best thing that you can do is rid yourself of mainstream stories. Just look at the structure, look at the momentum. The cheat sheet is absolutely your guide, and you can get structural levels on all of these charts. It is a literal game changer. The VIX and junk bonds are largely controlling the fate of the financial markets at the current time. Yesterday, we were here on junk bonds. Let's just play it forward and see what happened. This caused the Bitcoin spike up, and then everything went south. It's very important to look at junk bonds. If we get more negative downside momentum inside the markets, coming down to around that 96.52 is on the cards. Always remember that junk bonds and the VIX tend to move in inverted direction. We use them to confirm each other. This was always going to be a bit of a problem. This 96.78 area, if we managed to stay above it, that was a structural fail, and that was a structural fail. That was an underside retest and negative structural attraction to the 96.68. We've actually broken through there, so the negative structural attraction is to the 96.52 area. And you might say, hey Ken, I only trade random meme coins in crypto. Well, you really better know how charts intercorrelate and interconnect, because this brought down the markets. One thing you can do, you can look for a story, you can look for some news, you can look for whatever you want to look for, but everything is structurally based. It takes many decades to understand this. First of all, you will focus on the news because you believe the financial media knows what it's talking about. And to a large degree, they do, but the problem is the story for one day to explain something going up is the story for the next day to explain it coming down. And you know, that just doesn't make sense, but they do it all of the time. The truth inside financial markets is everything moves from structural level to structural level in a wave-based function. So when you know this truth of the market, you just look at the structure and you say, where is the structure going? And I better pay attention because everything is intercorrelated and interconnected. If you haven't already done so, please pick up a free copy of the cheat sheet, understanding how to fill it out, and there are a lot of videos, and especially inside the service, there's some quite good ones in there. So if you understand what this means, what it does, you'll understand so many different things. It is literally a game changer. You'll move into knowledge from confusion. And if you want to get all of these structural levels for all of these charts, I've just gone through a handful, not too many of them. You can actually go into the service, which is just here, and you can get all of these indicators. This is the chart that I show you. This is the chart from the service. So if you wanted to know the structural levels on gold or silver or oil or the yields or Forex, or Bitcoin or Ethereum Classic, they are all there. And it's all done in conjunction with Level 1 and Level 2 standard certification, which of course you can learn for yourself. Have a great day or night ahead, my friends, and Kate and I look forward to catching up with you again in the next video. Bye for now.